Welcome everyone to the Kendall Report. It is Monday night. Pretty good day today, huh? Everybody's expecting the end of the world. The end of the world doesn't come. We continue to chop around in the 39 handle and remain in this sideways range we've been in for weeks and weeks. Seems like forever anymore. But there's a reason why we're there, folks. We're there because there really is so much uncertainty. Nothing certain up or down right now. And certainly one of the things that I wanted to bring up tonight, it was interesting thought as I was getting ready for tonight's broadcast, as I was flashing back. You remember when the Fed, the whole idea of the Fed pivoting would be bullish? Remember, anytime the Fed's being accommodative was bullish? Well, they're being pretty accommodative right now, through the discount window, through some other facilities, but I know we were up today, but it just doesn't feel bullish. It's not the same kind of rhetoric around the markets. We continue to see all of the folks just out there hammering away at the markets. The market is the market's like Donald Trump. Everybody's beating on it right now. The banks, the end of the world, everything's going to go down. Credit Suisse deal was a terrible deal, but we got rid of the dumpster fire, and maybe they'll put it out, and is now become, we'll call it the instead of the UBS, I think it should just be Bank of Switzerland, and that'll make it real easy since there's only one major bank there now. So very intriguing. Of course, the Republic Bank stories are still flowing. But I think we're getting it down and isolating something. And something's really bugging me that I see on Twitter a lot lately, and I've stayed out of this stuff, is all of these people talking about the amount of uninsured deposits in these banks. That was like that last week, last year, 10 years ago. There's never been all of the assets in a bank are insured. What is that? The banking system, the U.S. dollar, any currency, anything is based upon that you believe in that currency, right? You believe in that institution. You're willing to put your money in there. And, that belief is based on balance sheets and all of the other stuff, and never on how much money was guaranteed. So there's just a lot of folks out there really trying to generate, I guess, negativity in the banking system. And I almost can't argue with the talk that somehow CS, Credit Suisse, was saying that basically the internet broke them down. And, everybody's been talking about this thing. And even on this channel, I remember a week prior to CS falling, is that folks were talking about, is Credit Suisse next? Well, it was. They managed to finally get it so it got consolidated into UBS. And if you know anything about UBS and Credit Suisse, they were rivals. Credit Suisse and UBS were old clients of mine on the institutional side, and I covered them, and a couple. I had about, matter of fact, Credit Suisse, I had Zurich, London, and New York were all offices that I covered on the proprietary trading desk. I was a consultant to those folks. And, all I can tell you is you mentioned UBS and they didn't like each other. Of course, there's, I had, a lot of European clients back in the day. This was back in 1996, 97, long time ago. Anyway, so, but as we look at, I think this banking thing, I made this comment last week, that this thing's going to be behind us so fast that it's going to be unbelievable. And, in spite of ignorant comments out of Janet Yellen, and everything that we see out of the current administration, it's just like, I don't know how they can compile so many stupid people in one group. It's amazing. But Janet Yellen, I've never been a fan of Yellen. Those of you been around me for years, I always call her Grammar Yellen. and then she was just really, she took over after Helicopter Ben. So it was pretty appropriate that after Helicopter Ben, we got Yellen, right? And I was talking to a friend the other day, and Yellen is the only Fed chair that didn't have a major crisis during her tenure at the Fed. You can go through the list. I've been through when I first started in the markets, 1979, Paul Volcker had just come in, Jimmy Carter had just appointed him, and he certainly had his mess to deal with, but everybody did. You can go through one after another, except for Yellen. I think it's very interesting, but she was kind of on the back end of Helicopter Ben, and the QE was still ongoing, and there was a lot of things to support the markets, support the system at that time. So what I want to talk about before I get into some of the market details tonight is just a little bit about where I think we are right now as far as the Fed and the banking system. If they pull this off like I think they're going to, so we come into Wednesday's Fed meeting, and yes, somebody was asking, there will be a live stream during the Fed meeting on Wednesday. I'll let you know tomorrow night the exact time that I'll start. I don't think I'll go the full 3 hours that I usually go. I'm going to do something lesser than that, maybe probably 2.5, just to get lots of exposure there. So look for that announcement. I'll put it out on Twitter, and I'll tell you tomorrow night on this stream. But one of the things that I want to talk about is the effort that the Fed is going to continue. And so the title of this video was Getting Ready for the Fed. So let's get ready for the Fed. The Fed's going to most likely raise rates by 25 bips. I have a theory. If they do nothing and they keep it unchanged, I think that tells you the Fed is scared. If they do that, I think that equals bad. Okay. If they lowered it by 25, that would be a disaster. That would be run for the hills, get into the bunker, because it's not a good thing. So they will raise rates 25. I believe 50 basis points are off the table completely. 25's on. They're going to keep the inflation story. And then Powell's going to get hammered on Wednesday afternoon with questions about the banking system and everything from SVB to, Signature to Republic. It's just going to go on and on and on. You have to realize, if you watch any of these press conferences, very few of the people asking questions actually know even what they're talking about. If you notice, they're usually reading. I always laugh when I see somebody and they're asking a question to somebody and they have their phone up and they're reading the question off their phone. So obviously their headquarters, whoever their boss is, saying, ask this question. Okay, it'd be nice to have at least some people, as much as I don't like Steve Leisman that much, he at least is intelligent enough to ask good questions. And he probably asked, I actually have to say, him and maybe a guy from Bloomberg and somebody else are the only people that are knowledgeable enough that have a reason to even ask the question, other than something that's pre-scheduled for what they're going to talk about. But the Fed's going to stick with their inflation story. Everything's going to go on. I mean, we've been watching crude oil under pressure day after day. We're looking at crude at $67. It's hard to believe that it's there. I guess if you sell all the SPR, you can knock the price of oil down. Gold is up. So there's some things going on we'll discuss later. But the bottom line is that the Fed is going to stick with their plan. And I've been telling you this, not even this little mini crisis is going to be something. I see there's some folks out there talking about, that this is the same kind of trigger that had happened when Bear Stearns was there. Most of the people saying that have no clue. I was there during the Bear Stearns, and I can tell you, if you could have, unfortunately, I didn't do a YouTube like this. I had internal research that I did, and I do anything to get my hands on it. Unfortunately, it's been purged from the planet. But basically, the Bear Stearns situation was way different because everybody had the same trade. So I remember telling all my subscribers, our institutional clients, that said, everybody's got the same trade on. This is bad. I started predicting banks were going to go out of business long before most people. And our models that I'm going to show you here, the output tonight, those were already in, when it came into November 2007, they were already heavy in cash. We were about 60% in cash on our equity portfolios coming in to 2008. And everything started to break down from there, but everybody had the same trade on. This time, everybody doesn't have the same trade. They're trying to draw the correlations through these uninsured deposits. I mean, if anybody would have looked, like I said, I'm a little bit in a loop here, but if anybody would have looked at what was going on any day before 3 weeks ago, they were always those uninsured numbers out there. They've always been this way. This is how the banking system works. You know, I did hear one guy come up with a pretty good idea that you could buy insurance on your deposits, but I'd like to know who the entity that would be issuing that insurance, and would they be solvent enough if there was a call on that insurance policy to be paid? Who would pay that? So it's kind of funny. It's called FDIC, and there's limits for a reason. And I guess you open up hundreds of bank accounts if you have lots of money. There are people out there that will aggregate that if you have so much money. But for the most part, most of us are going to keep money in a bank or institution. It's probably easier to hang out with the brokerage guys, the Civic, and a lot of the overage coverage that's there. There's, several up to 20 million I've seen on some brokerage accounts. If you want insurance, that makes you feel good. Reminds me of a quote from the movie Tommy Boy when they were talking about having the guarantee on a box. It's the same thing. Listen, nothing's guaranteed. Everything is up for grabs, and that's not a good enough reason, in my view, to draw the conclusion that the entire banking system is a piece of crap and that it's all going down. And I've told you from the very first day when SBV came out, SBF, that's an interesting Freudian right there. When that came out, that this was an isolated situation. And if you look at it, a lot of these guys were even doing venture capital stuff. Signature was deep into crypto. There's a lot of this stuff that's just, getting blown up, and it's not everybody. So I think, like I said a number of days ago, that we're going to get into that mode where we're not even going to remember this happened maybe a month from now, if that. So back to Powell and the boys on the Fed. They're going, Powell's job will be to tell everybody that basically everything's backstopped. There's enough capital there to just back up everything for the people that need it. And the people that really need it are minimal. And hopefully he does a good job on that story. He does that. I don't necessarily predicting some big equity rally, because you'll see here the technicals just aren't set up for any big rally, but we're really just set up for more of this choppy range. So finally, folks, I'm going to get into tonight's video and some of the content here. So let's take a quick look at what's coming out tomorrow. We got from existing home sales expect to be 4.16 million. It was 4 million last month. I think the housing sector is trying to turn around here. I've been saying that for the last probably 6 weeks. We're starting to see little better metrics, not big, robust numbers, but I think it's flattened out. I think it's probably bottomed, and maybe we'll start to see some things come around there. Just remember, we just saw a huge drop in interest rates, so maybe that's enough to stimulate some activity as well. So, and we'll cover the 10-year, and I'll actually go through the 2-year as well. We'll talk about that a little bit. But the whole, that's all that's coming out tomorrow. I'm looking at my notes here. I talked to you about when the Fed did something accommodative, that was bullish. I guess you could argue, we saw some decent upside tonight, but or today, and overnight we're still seeing that the future up 3.25. They were up about 8, so they're backing off a little bit. We're pretty close to playing with 4,000 on the futures. So let me just, I think that's it. Let's get into the database, and we'll get through the rest. It shouldn't take too long. My notes here for tonight's stream are just very light. There's not a lot going on other than looking back at the CS deal and everything's going on in the banking. So let's go ahead and get through the Wavetech database. So here we go. We had 215 buys, 126 sell signals coming out. We're at 15.38% bullish. We were at 16 and change, so we had a little bit more. I take that back. We're up a little bit. We had 215 buys, 126 sells, so we increased by just a little bit. We're a long ways. We got to get above the thresholds we need to get through is 22% bullish, then 28, and then after 28, the next big number is 42, and I suspect we are a ways from that. That's going to take multiple weeks to get this thing repaired. I've talked to you about this before when we were doing this. Just what happens when we're doing this, going through this database, it takes weeks for, once we crush the market, we get down to double digits. Sometimes we go to single. We get down to around 11 or 12%, and that was enough for it to get to start this recycling process. So it's weeks away, I think. Looking at, as we go through the technicals here in a minute, you'll see that it's really just kind of weeks away from rotating, getting into any number. 42% so far away, it's unbelievable. So we'll see if we can get above 22. That's going to take some positive days to start to see that kind of rotation start. All right, let's start with the hourly charts here on the S&P. Very interesting. We did get that big pivot. The algos did a really good job today. For those of you that have the indicators, you should have been able to catch that turn. I had amazing trade. Overnight, we traded down, by the way, we traded down to S2, which was right at 3,900. We printed just under 3,900, and that was the reversal, and it all started about 2 hours after London last night. So we traded down into London, and then we just had a vertical move to the upside. We trailed right along this 10-period moving average. The algos on the hourly are suggesting we're just going to go flat. The number to watch overnight, this is going to be the key number on the overnight market, is to watch for this 39.71. That should be a solid support number. As long as we stay above that, and we're likely to see the potential for this thing setting up for maybe a little bit more push to the upside. I'll show you here on the daily algos, they're set up pretty good for a continuation for the next couple of days of upward movement. And very likely we're going to get into that, back to that 40-50 level. But this intraday, looking at the hourly, this should be the setup. We should hold this support. There's a little bit of downside right now. We're looking at the 10-period moving average at 82.21 is at 62 right now, but in the next 2 hours, it's going to be moving up right to that 71 number. So your key number to watch is 71. Let's go over to the daily. And daily had a reasonable reversal in this pattern. There's a couple numbers to watch for. I mentioned high target one was 36.96, and yesterday we traded up to 39.89.50, so we came just short of that. And overnight so far we've traded 98, so we've hit that fib target one. Fib target two is 40.57. That would put us up here around the 40 period moving average. And the algos, and this is what I've been talking to you about the last couple of days, is we've actually got the algos looking like we're going to continue on the upside. You see we penetrated, we got the penetration of PPM 1 and 2 on PPM 1, we got a penetration of the first and second derivative. On PPM 2, the red line here, we're about to penetrate through the second derivative there, which would be a positive. Tells us we should start to challenge the this number here at the right now that moving average is 75, so we're above it, but that should start to turn up in the next couple sessions. The 40 is just rounding off. That's the cyan line up on top here. It's up here at 40.38. That's going to be your resistance point, 40.25. We had a high, I think, let's just look at it here real quick. We had a high here I think it was last week. Yeah, we got 4,000, and then we had, there was a 40.24 high to watch for. We penetrate through that, then we should set up a move towards this fib target 2, which is up at the 40.57. And the whole scenario that I've been talking to you folks about is that we're locked in this range, and it was 39.50, 40.50. And we printed down to 38 and change. We didn't quite hit some of the fib targets, we came close, but basically 38.50. Now here we are at 39.50 plus, and I think we fall right back into this range. This range that we've been locked in here where my cursor is, that is, I mean, there's nothing telling us we're going to get out of there other than we're starting to see some acceleration in the PPM 1. But even at its best, where it's being predicted to go to right now, isn't going to be into a serious trend mode. There's going to be an upward slope. And I think what we're likely to see here is really just everything turning up slightly in this just very gradual range. I don't think we're going to see any big movements up or down. That's what I was trying to allude to here on when we were talking a few minutes ago. There's just nothing in this market that looks like it wants to drive. I think we could trade up to these upward bounds here. Let's go over to the weekly chart here real quick. And we've already seen on a weekly, on the market grid on the weekly, we've got a couple numbers to watch. We've already exceeded R2 weekly. So R3 right now is 40.17. That's right around that 24 number I was just talking about. And then the other number to watch for is going to be, from R3 is 17 and RXT is 40.54, which maps perfect to that fib target I just talked to you about. So it looks like there is some upward bias. We also have the 10-week moving average up here at 40.26. So we got a cluster of numbers at right around 40.26. If we break through that, that will actually be a serious positive and start to flip these charts a little bit. But based on everything I'm seeing here, weeklies are just stable. There's nothing here, and it's frustrating. I know. I'd love to have a market, but it looked that would start to move up or down. Don't care which way. But the bottom line is, it looks like we're just chopping sideways with a very slight upward slope. All right, going to the NASDAQ. We're looking at this. It's a little more pronounced. I've been talking about this in the NASDAQ. We've got a little more upward slope. The PPM 1 is at a 0.88, which is a very solid uptrend here. 12,287 is where that number is. That should be the point at where you are able to hold. And if you trade it down there, that would be a great buying point, because right now there's only a 20% probability of the market getting through that level. The algos, however, this is a weekly. The algos, however, are suggesting that next week or so we're going to roll through, and I think all that's going to happen is we're going to set back into these moving averages. So, like I said, there's nothing that I can find that's really pulling into this. Let's take a look at the dailies real quick, and the dailies are doing the same thing here, folks. It's we've got this upward bias, just like with the S&P. There's a few more days, probably through this week, where we're going to be able to print an upward bias here, but nothing like super robust that is suggesting that markets are going to be able to get much over, any kind of exhilarating movement to the upside. I think we just stated the upside. Probably look at those numbers that we're just looking at on the weekly patterns from RXT. So if you have the indicators, just go there. If you don't have the indicators, go to kendallreport.com/indicators, and you can find out about them there. So the point is that what we should be able to see out of this is a few more days of positivity, including, even though right now we are, we're printing up at the higher end of these weekly ranges. I think we continue right into the Fed meeting. We'll see how things set up tomorrow. I think tomorrow and overnight we'll have a pretty good feel. I expect, I'm kind of tying some Fed thoughts and continue to talk about that a little bit. They're going to keep, everything in place, folks. Everybody's going to forget about this so-called banking crisis. And I think too many people are driving in the rearview mirror. I saw somebody comparing Bear Stearns to SBV, and I mean, it's just real amateur stuff. Be careful trying to look at what happened before and compare it to today. I call it it's like driving in the looking in the rearview mirror. Works really good till you hit a corner. You're right off the road, and be careful looking back too much. Stay looking current and forward, and you'll do a lot better trading. All right, here's what I was talking about yesterday. We're coming right up to that. This is a Russell, and this is the daily. We're coming right up to that 10-period moving average. The algos are suggesting we're going to get through there. So if this is going to be right from the standpoint of the auto-regression projections that we're getting here from the indicators, those are the shadowed lines here, the grayed out lines. They're suggesting that they're going to turn up, and it's actually projecting in the next two sessions that we'll get through the second derivative, which means that we should penetrate the 10-period moving average. 1782 is that number. And just looking at the daily market grid here, we're looking at the patterns here right now. We're looking at 1772 is R2, R3 is 1791, and then we're looking at this moving average right here at 1782. So we're coming right into this resistance. It looks like this will be pretty strong downward pressure here. PPM1 is at a minus 0.27. If you're new around here, you'll know that anything under a negative 0.25 or a positive 0.25 is an uptrend, or a downtrend in this case, a minus. So there's going to be a lot of resistance right at this number. So I would expect that it will not be Tuesday breakout, probably Wednesday, maybe with the Fed volatility and some of the announcements that are coming there. All right, let's take a look at the yields on the 10-year. It's interesting. Looks like yields are about to turn back up a little bit. We got way overdone with all this craziness. But as I've said before, and I'll bring this up right now, is what we're seeing here is this really quick correction has solved not everything, but it's taken off a lot of the pressure of this depreciation because of how fast. If I flip this over and I show you the futures, they're vertical in this pattern, but they're going to pull back here. We're probably going to get back above the 200-day moving average on the yields. We should see probably tomorrow. We'll probably see the market grid turn up, and so there'll be start to move towards that 10-period moving average 377. We're looking last trade right now at 348. So we're looking at potential, we'll say 15 to 25 basis points on the upside here on the treasuries on the 10-year. Looks pretty good. Let's look at the futures real quick. And this is something else that I talked about, is that this big move up, you get this expansion. The market grid comes up and it expands, and it's a volatility expansion. When that happens, we should see the market grid start to come in over the next couple sessions here, and then we'll probably get back under the 200. We'll go back under the 10-period moving average, and that key numbers can be 113.30 is kind of the rollover number. If we go the next day, it's probably right at the 114 handle. But just look for that to come back in, and ultimately we'll start to consolidate, probably move back down, I suspect, toward where the 10 and 21 period moving averages are going to meet, somewhere between around, we'll just call it around 113 even, 113.04 or something like that. That should be the numbers that we're looking at there. Let's take a quick look at the 2-year yield at the 2-year here, and you can see same kind of situation here. We got a reversal yesterday. This is a daily. We should come back into there's also a pivot number in here. When you see, those of you that have the indicators, when you see this green dots here, I'll just blow it up so you can see this right there. That's 100.275 here. And so that's right where this thing should start to pivot. We get below that number, we'll see some further deterioration in the prices here and yields going back up a bit. But you can also see the algos are predicting a complete rollover, and matter of fact, a sharp rollover at that. So the only way that's going to happen is we start to see interest rates stabilize. That interest rates going back up is going to mean that the banking system and this situation we've been dealing with will be dissipating. So as rates go up, that'll be a good sign. Rates going down, bad sign. Looks like the algos are predicting probably 2 days out what's going to happen in 2 days. Powell's going to talk, that we should see all this stuff come back in. Equity markets are looking higher, and the interest rate markets are looking lower in this pattern. All right, next what we'll look at here is crude oil. We finally got a little reversal. I was talking about yesterday, the algos turning up. It looks like we should challenge the 10-period moving average here over, I would say, in the next 2 sessions. Could happen today. There's also a pivot number here at 69.90. So if you're trading crude, watch 69.90. Above that level, we're probably going to head up toward 72, 74 range. But this market should bottom right in here, and everything's pointing to a low in this pattern. And this is one of these patterns I call a bubble pattern. You can look at every low that we've had here. Let me just bring that up real quick so make sure we're all looking at the same thing here. But if you look at every one of these lows, we get this little we have the same formation even here. We're getting the same pattern over here. So all of these little bubbles, they come back into the moving averages, maybe rise above them, come back down. But I talked about this before, is we were locked into this box pattern here. So this most recent pattern that we've seen unfold, this down here, has been it has exceeded out of that box formation. And I think what we do is we end up trading back in here because all these move. I got a lot going on here. Let me trash all this. We got a lot going on. We have the moving averages coming down here. What's going to happen is this 10-period moving average will start to come over here. And if we're going to get a bottom, we'll see the 10 cross over the 21. And all these averages are going to come in here and get into one of these crossing type patterns. And this is what the algos are suggesting here, is that they're going to bleed off their downside momentum and then start to bottom and start to round here. So we'll watch that as we go through all the patterns here in the next several days. All right, next we'll cover gold. And I talked about this last night. We got the RTX sell signal. We should get 1 to 2 days minimum of downside action. We did get a reversal yesterday. We printed up the 2014, printed a new high in this pattern, then closed on the bottom end of this. We should stay within the market grid for the next, I would expect, next several sessions, maybe 3 to 5. So we should trade within that range right now. You can look at over on the right-hand side, there's the numbers, but I'll just read them out. The typical would be somewhere around S1, S2 would be the extremes. That's 1961.48. On the upside, we printed the highs of yesterday was right at RXT. And today what we're looking at so far is just a really very, very narrow action. But what we're looking at here from the algos is the algos are also predicting that whatever today should be the beginning of at least a slight turnaround, and ultimately we should head toward the 21-period moving average, which is rising under this action. And so that's really good. Yeah, so as I've showed you guys before, we have weekly buys around 1,800 and then a daily buy around 18. I think it was 1860 or 70. I won't bring them up, but that's we have long positions here, and it should be ongoing. Matter of fact, let me see if I can bring that up. Yeah, this is gold right here. So the this is weekly. The buy signal on weekly was 1890 cents. And then if we've flipped this over to a daily, there was a buy over here at 1877 on the way up on the short term. And it was short coming into that. So we were short over here at the 1926 level and actually reversed that trade at 1877. So made about $50 there, and now got a nice trade going here. But this pattern appears to be like it's going to continue onward here after consolidation on a weekly. That's going to be huge. Let me just bring the weekly chart up here real quick. We've just kind of broken out of all the ranges here, and at this point, so this will be the kind of action we're getting here on the weekly is suggesting that we're going probably not to fail, but we're going to come back in probably into 1920, 1940, somewhere in there. We should start to consolidate up here from that range. So similar pattern here on Bitcoin, which will be the final market we'll cover tonight. I mentioned we actually got the RTX sell signal here on March 23rd. We got one down, like I said, it's 1 to 2 days, but we're still, in my opinion, we're starting to climb through this pattern here. The key level that's going to be, just watch a simple 10-period moving average. It looks like in about 2 sessions, we're going to cross through the first derivative. This is actually signaling right now that we're going to test this 10-period moving average. It's at 25,884, and it is rising right now at about, we're going to call it about $700 per day. So it's going to be 26.5, just rounding numbers off, 26.5, and then 27.2. So this number is going to come into play in the next 2 days. Should be some residual support there. Ultimately, we probably continue to consolidate up here and not expect to see much higher prices. Let's look at the weekly chart real quick here. So the weekly chart exploded. We're over the 200 week, which is interesting about this is that let me rescale this. Okay. I'm just trying to get this bottom indicator. So everything looks like, even on the weekly, that we're going to come back into the pattern. But the weekly support level, just use a simple 10. That's all you're going to need here is 23,968, and it's going up roughly about the same, about 700 as on the daily right now. Daily will start to roll over a little sooner than the other one, than the weekly. Okay, folks, that'll do it for tonight. I'm just looking at some of your comments here. I'm just looking at some comments real quick. I'm just watching some of you guys, the comments are pretty funny. Yeah, so I will let you know tomorrow night exactly what time we're going to meet on Wednesday. It'll probably be like 1:30, a half hour before Powell comes up, before the announcement, and that'll be an hour before the comments. I'm not sure how we're going to handle this from the standpoint of how much we'll listen to. We'll watch a price action, maybe even do some trades there. Who knows? Depends on what's going on. But anyway, folks, thanks as always coming every night and watching this live. I appreciate it. Your interaction is very necessary, and you can't leave unless you hit the like button. And if you watched it this far, make sure that you also subscribe. So have a great day trading tomorrow. We'll see you tomorrow night, and then looking forward to Fed Day on Wednesday. It should be a very interesting week. Have a great evening, everyone. Thank you, Smurfs. I don't know if there was any trolls, but I don't even look anymore. I know you guys got my back. Thank you. Yeah, there's not going to be spaces tomorrow because Phil's wife cannot make it. So if you're hanging out, I'll let you know. We have to reorganize everything because of the Fed. So we can't do it Wednesday. I've got a plan. I will tell you about it tomorrow night. Thanks for asking.